Hello, everyone. Hello, hello, hello. Hope you guys can hear me well. Welcome to another live stream. Apologies for last live stream, last Friday. Um, I wasn't able to do it, and it was also um, we had very low volatility in the market, which is mainly the topic for today because we still have very low volatility in the markets. So I had connectivity issues in the building. They were changing something with the fiber optics, so I wasn't able to. So welcome to today's options Friday option stream. It's gonna be a little short, and again, first of all, I want to apologize for whatever noise you guys might hear today. By the way, if you guys can hear me okay, just let me know here in the chat so we can I can fix it if needed. Just because I had to tweak the microphone. Let me explain why. Because right now, currently, it is happening. Hello, Erman, how are you doing? Right now, it is currently happening. The World Cup is happening right now. Brazil is playing right now as live streaming this. Brazil is currently playing against the country of Cameroon. I don't know how to say that in English, but thank you, Mort. Sounds good. Welcome, Mort. So whatever loud noise you guys might hear is because of the Brazil might have scored a goal. So this might be it. Apologies for any noise even before it happens. So let's take a look at where we left off. Okay, so last week, let me actually share the screen right here. Intermission. Actually, let's go to this one. There we go. So this is where we left off. Last week, we did not sell anything just because low volatility. At some point, when volatility is very low, you have to make a decision if it is worth it for you. If you if you know where the market is going, or at least you know where it won't be, then you might take a risk just for a little bit of that premium, which is going to be very low because low volatility. Or you can just leave it off. Don't do anything, right? Which is what I did. It was a no trading week for me just because of the situation, right? So very low volatility, it meant no trading for me that week. This week I'm gonna trade it just so we can so I can show you what would you do if you had to trade in a low volatility. Hello, Armat Coin, how are you doing? Glad you joined. Let me just full screen this real quick so I can put my MetaMask here, log in with my account, and then we can show you some implied volatility statistics where we can let's go to optimism. There we go, connected, and just refresh. This one goes to desktop. All right, so let me show you the dashboard for Lyra right here. This one, you can just, if you want to know how to get here, if you want to know how to see what I'm seeing, all these statistics here, you just go on Lyra, the protocol itself, and you go to stats. It's going to redirect you to this stats page. You can either just go on stats.lyra.finance. And here I watch mainly the volatility, the implied volatility. So what can we see right now with this implied volatility? It dropped quite a lot. So it was over 80, which is good. We like very high volatility. We as a seller, as sellers, we do like selling high volatility. The premium is juicier, and then we get IV crush if IV goes down. So it is the best case scenario for us is selling high IV, which is not the case. We are at an average of 66, okay, average. But if we actually look here at the options sheets, I don't know, the option grid, yeah, I think it's a better name, option grid. we can see right here that we have 75 to 58% implied volatility. So actually, so the average would be around right here, 66, more or less. So what should we choose? What should we choose if, for example, last week we didn't sell any, today we want to sell something? I do believe now implied volatility will stay very low. I don't believe it will go up. December is not a good month for stocks or for crypto, just because people are trying, people usually take money off their investments to buy gifts, to buy things they want to spend that money, you know, for the festivities, for the holidays. So we tend to see not actually red months or red days for in December, but very low volatility. There's not much movement. That doesn't necessarily mean that the market's going to drop in December. It's just going to have less movement, money movement. Okay, so I think we will see a low IV voice crack. Sorry, we will see a low IV for December, maybe January, and then it will pick up from what November was, which was very high, over 100, over 120 in some cases in October, end of October. I think we'll see that by next year. We're not going to see that so far right now. So what should we choose, right? What should we choose? Because last week we didn't sell any, and our portfolio is looking so far at 1526 is how it looks right now. Zero movement because I didn't do any trading last week. So this is where we are right now. So if I go to trade, we can either, let me look right here at the chart. We can either go above the Bollinger Bands, okay? I'm not going to be here explaining indicators to you because you might find a better use, you might find better indicators for your strategy. I'm not a technical analyst. I'm never going to say that this strategy is bulletproof. This indicator has a 100% win rate. This does not exist. Whoever tells you that is trying to sell you a fake ideology. So no indicator is for sure going to tell you what is going to happen to the market. Otherwise, no one would be seeing this indicator. I would not sell you an indicator that is 100% win rate, okay? Because I would keep it to myself and make tons of money using this indicator. But I do use Bollinger Bands, the RSI. Some people do use Fibonacci. I'm not that good with Fibonacci. But I do see Fibonacci as very good support and resistances. People do respect, the market does respect Fibonacci a lot. So if that's something that you use, go ahead and use that. But you can either go and sell above the Bollinger Bands if you think the market's the price is just going to touch the Bollinger Bands and then go down. But for now, I am this week I am tempted to sell a put instead, because I do think the market's going to go either way for low volatility. I don't think it will be, I think it will be just sideways, like this period right here, which went from October 6th to October 22nd. I think we're going to see another one of these weeks right here, which is not very exciting for us selling options, but we can still make something out of it. So if we look at our possibilities, let me go back to this screen right here. If we look at our possibilities, we have right here, we're going to sell still November 9th, December 9th. We're going to sell a put. So which one should we sell? If we're going to the 1150, so 1150 as a strike, we have a very, very low premium, $3. So if you're putting right here, if you're selling one contract and you are fully collateralized, you're going to get $3, which if we pull up the calculator right now and we do 318 and we divide that by 150, we get a 0.27% 0.27% yield for the week. Very, very low. Okay, that if you compound that, you can still make a good yield, but it is low for our liking. If you know, I try to make above 1.8 if volatility is on my side, which is not our case right now. So delta is very safe, but because volatility is very low, we can try and risk it a little bit, okay? Which would be the case right here. This one has a 20 delta. 20 delta is already a little bit riskier, you know, for beginners. I never advise for you to go above 20, but in our case, this should be okay. At least this is what I'm going to do with this strategy. Now, let me tell you why this is going to be just with my portfolio, okay? My portfolio. So questions, we have Armat saying, if sideways, then put or call should be equal, right? How do you use Bollinger Band to decide? Okay, how I decide is that, for example, if we go more or less 5% positive or 5% negative, you can see right here that Bollinger Bands 5% positive, 5% above the strike price is going to be 5% above the actual price is going to be outside the Bollinger Bands, okay? When something is about outside Bollinger Bands, it should be safe, should be a safe place. So this should be safe. And then if it is something inside the Bollinger Bands, then it should be less safe than a number outside of the Bollinger Bands, which is the case for us if we put 5% under. Okay, so 5% under, we are still inside the Bollinger Bands right here. We're still inside. But because we have very low volatility, these bands are going to close. Okay, these bands are eventually going to close. You can see right here, they will shrink and they're going to create this tunnel right here. Okay, so why would I choose a put instead of a call? Okay, if we go back right here and we compare the furthest out of the money here for the put, it is paying you 319, and the furthest one for the call is 0.13 delta, so very safe delta, and it is a $4. So it is almost a full dollar above in premium. This is a good premium. Again, you would need more collateral. So for example, if you put in one and then 1400 in collateral, you would be making calculator, we go for 441, we divided that by 1400, you would be making 31.31% in yield. So way better yield than the other one, which was 27, if I'm not mistaken. Okay, so here the delta is very close, 9 to 13, just a few delta above, not really that bad. But if we look right here, we have $140 in difference from one and $116 in difference to the other. So actually selling the put, it is safer to break even, okay? Safe. The implied volatility, let me see, 59 and 50. The implied volatility is better for us on the put side, okay? Because right here is 59.3 and right here it is 50.1. So the call has less implied volatility. 50 is very low implied volatility. So this is another reason. I wouldn't sell 50 implied volatility unless I had to, okay? Unless I had to. So since I am risking, since we've established that selling a put is better in this week's situation, and it's not going to be always like this. For this week, this is better. So in my case, I'm going to step up a little bit and risk a little bit more, okay? So I'm going to a 0.20 delta. Double what it was from here. So here's almost 1, and I'm going to a 0.20. I'm going to a 62 implied volatility, and if it was a call, and if we went to 1350, a delta is 30. So I'm getting almost the same premium, but a delta is way worse here in this case for the 1350. And less implied volatility. So in both cases, both for the furthest out of the money and the strike above or under it, the closest strike, it is better for us to stick with the puts, okay? It's better for us. And since I do believe implied volatility will drop even more, I think the 62 might go up to 70 maybe, and then go down back to 59, 58, whatever. I think for me this week, the best option is to go with this right here. But It doesn't mean that everyone should do this. For example, I do have my option selling pool, which is this one right here, on DHedge, which we had a very bad start. Why? Because we had this implied volatility right here, this spike in implied volatility right here. Okay, this right here was really, really bad because implied volatility was really, really low, and I thought this green candle was just gonna close and then this is it, but then it spiked up, and I had sold a very, very, very conservative call. Yeah, I sold a call, and then it went really, really bad really fast because of high volatility. I sold low IV and IV climbed up, so I had to close it. We eventually we got a 2.7% drawdown on this that week. Then last week I did not trade because of low IV, and since this one is a very conservative pool, when there's no need to trade, and when there's no volatility to trade, I'm not going to trade. This week I might trade it. I might trade this week with this, but I'm not going to do the same strategy that I'm going to do for mine, because I risk more with my own capital than with the pool capital. So what am I going to do with the pool capital? The pool capital, I'm most likely just going to sell the 1150 because it is a very low delta. This delta right now is probably about to disappear because once it goes under 0.09 delta, it just goes away. So I might just sell this here later when I finish the live stream for very, very little premium. Okay, it's not going to be a good premium at all, but it will keep the cash flow incoming, just because we had a very bad drawdown, a very bad week in the beginning. So it's going to be very safe for the option selling pool. Now, going back to my strategy, I am going to risk with this higher delta, but higher premium. So how much can I risk with this one right here? Let me see if I have any questions. No questions so far. So let's run a simulation. Okay, let me close this so guys, we don't get confused. So I'm going to put right here the 1500 as collateral, which is what I'm going to be using. And let's see if 3 contracts is enough. Yeah, we can go way above. We can go to 3.4. We can go to 3.6, 3.8. Wow, we can actually go to 4. Yes, we can go to 4 contracts. So, oh, sorry, you guys were not seeing this. Let me move it right here. So I put 4 contracts at 1500. So what is my leverage right here? How do we calculate the leverage? Okay, so if I'm using 4 contracts, I should have 4 times the strike in collateral. Okay, so 4 times 1200 should be 4800, but I'm actually using 1500, so I'm actually 3.2 times leveraged. Okay, this is my leverage. I am only using 1500 in capital, and I'm leveraging that 3.2 times, which is risky. Okay, but again, it is a risk that I'm willing to take with my money. Again, I wouldn't take the risk with the options pool. I wouldn't take the risk with other people's money. I do not advise you to use leverage, again, just because if you don't understand the risks, for example, if you don't understand what happens when you reach liquidation price, which is a question that I got asked actually yesterday. What happens if Ethereum goes under 1200, okay? Under 1200, but it still stays above the liquidation price. Well, we can see it right here. We have the 1200, which is our strike, and we have our liquidation price, which is 160 right here. You see 1060. So if it closes, let's say at 1130, you are going to lose that amount. So you see right here that 224, that is the amount by expiration date that you're actually going to lose if it goes under that. And if it goes all the way to liquidation price, boom, you get to lose a huge chunk of your money. Okay, you get liquidated. When you get liquidated, you get wiped out of the option. Okay, you close the trade and you get wiped out. So This is why you need to have you need to take very, very careful steps when you do leverage. Because we are using low IV, we can risk leveraging more if IV still remains low, okay? If IV climbs up very fast, I might have to take a loss and close it before even reaches the strike price. Because if it goes way in the money, if it goes at the money and then in the money, I get the premium is gonna go high very, very fast. Okay, we want to avoid that. So Tennis is asking, why not leverage at 1,150? Okay, this is a great question, because if we look right here at portfolio, I have available the free collateral, or the cash that I have in hand is 1,526 to be more exact. But I usually don't use, I tend to round the numbers. So if I had 1575, I would use 1550. Since I have 1526, I'm going to use 15 as collateral, okay? Because if I have 1,500 in cash, just cash laying there, and I don't use all that cash, I'm losing an opportunity to make an extra buck to leverage a little bit more, okay? Because if we go to 1150, for example, okay, we cannot go 4 anymore, okay? If I put 4 right here, so now I am the liquidation price is above my strike price, and this is not good, meaning that I'm very close to getting liquidated. So because I put less money in collateral, I have to lower the contracts, meaning that I'm gonna get less. I'm gonna receive less premium. Okay, I'm gonna get less premium. So there's just a matter of knowing how much money you have, how much you want to leverage, if you want to leverage. Which again, I don't advise if you don't know what you're doing. It is up for it is a combination of your capital and how much leverage you want to do. So this is why I put 1,500 right here. Okay, so let's check it again real quick. So if it stays above 1,200, I make money. So 1,200 should be 5% more or less. 6% actually. So perfect for low volatility. So we still have a 20. Yeah, we still have a 20 moving average, actually a 9 moving average, and a 20 moving average above our strike price. So these should be good supports for Ethereum if Ethereum goes down, which actually doesn't look like it's going down, because right now it is climbing to 1290. So my premium is going to be a little bit lower than this. So let's run the numbers real quick to see how much yield would I make with this scenario right here. So I would get $45.41, and I divided this by 1,500. This would be a 3%, okay? 3.02, rounding 3%. Last month, November, without trading the last week, so the ending week of November, I've made, let me see if I can find the numbers right here on the other screen. So we had 1, 2, 3 profitable weeks, and then this week I did not trade. So this right here, I think it was 2%, this was 2.7%, and this was 3.2%. So let's do 2 plus 2.7 plus 3.2%. I made 7.9. Okay, great yield for a full month without with 1 week where we didn't trade. Amazing yield. These are rare months just because IV was so high. So very profitable for us. So this should be 3% yield, should be fine. Let's sell the put, confirm the transaction on our MetaMask, and I'll be glad to answer any questions that you guys have, if you guys have any. So gas fees, I'm going to confirm right here. It's going to take a little bit. And another thing, people were asking me, yesterday someone asked me on Twitter, on what do I receive, where do I receive this 42.56? Okay. Where do I receive this premium? This premium is already in my portfolio right now. This premium is already in my portfolio. I get paid in SUSD because that's what I deposited as collateral. You can see right here. Yeah, I just got this 42 in SUSD in my wallet. Okay, this is what I got. This is right here in the transaction ID on the blockchain. So this is already in my wallet. And if I close the position and it went to 0, then I keep the whole premium. If I close the position and this is another price, that difference is going to get subtracted from the premium. So if this number is above than the price that I paid, then I'm going to be net negative. If it is under, then I'm going to be net positive. Okay, net positive. So still confused about when high IV is good and when low is good. Low is never good. Low IV is never good. Okay, let me move right here so I can explain intermission. Intermission right here. So Armat is asking, still confused about when when high IV is good and when low is good. High IV is always good. Low IV is never good for sellers. Low IV is good for buyers. Right now, it is a great time for you to, for example, if you want to hedge your selling, so if you're selling options and you want to hedge against it in case it goes bad, we just sold an option right now, okay? I can buy an option now to protect me in case this option that I'm selling goes bad. Because if IV goes up, okay, IV right now is at 66% for this operation. So I don't even need the headphones. I don't know why I have headphones on. I will just hear my own voice. So as a buyer, when you buy these options, you can hedge your selling options by buying options with low IV, because if IV goes up, the premium of these options are going to go up. So it is better for you. I don't tend to find the need, maybe for this one, since it's a little bit riskier with a closer 6% only difference between actual price and strike price, only 6% difference. I might just buy a put, whatever strike above the 1200, just buy a put in case it goes down. I am protected. Okay, I'm not gonna lose as much, or I can even be profitable if I close the selling option and just skip the put. I'm not gonna do that because I think Ethereum will go up. Ethereum is already going up, as we can see right here. I'm just hearing a lot of noise. I don't know if Brazil just scored in the World Cup, but I'm hearing a lot of noise right now. I don't know if you guys can hear, so I apologize if you guys can. So I hope this answered your question. Low IV is very bad for sellers. High IV is very good for sellers. I thought you said low IV was good for leverage. Okay, yes, but that's a different thing. You still don't, when you need to sell, when you want to sell low IV, let's say IV is very low, I want to sell it. The premium is going to be very bad, but because the IV is very low, you can leverage a little bit more than your usual leveraging, okay? Because it gives you that extra range just because IV is very low. But again, if IV goes up, you're risking way more, because the more leverage you're taking, the more is money that you don't have that you are borrowing. So it is good if IV is low and it stays low throughout the period of time you're doing that option for. So, and if throughout this week, so until next Friday, the 9th, if it stays low IV and I'm leveraged, dandy. Okay, I could leverage a little bit more. I squeezed it to 4 contracts. Everyone is happy. But now, if IV goes up, then I'm screwed because I am leveraged a little bit more. But if IV goes up and it goes against me, meaning IV goes up, but Ethereum goes down really fast, then that's bad for me. But if IV goes up and Ethereum goes up in price, since we sold a put, we really don't even care if Ethereum goes to 2000 right now, okay? Because we sold a put. So no noise, great. That's really good. So do we have any more questions? Let me just see right here, what was the fuss about? how's the connection is. The connection seems good, healthy. So before I end the stream, this is going to be a very fast stream just because options are usually very fast. It doesn't take a lot of time. It takes me half an hour to do this because I explained that to you how my mind works. At least I try to. This is why we need to ask questions, just so I can try to explain how my mind is working. So before we end our live stream, let me just share that right now I'm probably going to be doing a coupon code or a discount on my course, just because December, right now is showing in the Brazilian currency, but if you join in with the link, which is the first link in the description, you will see that in your own currency. If it is your first time using Udemy, for sure, you're already gonna have a bonus, because first time users do get a discount from Udemy themselves, not from me. So you might see that, but I will be providing probably Christmas code, something like that, with discounts for my course, which is doing amazing. 82 students, a bunch of these are from the Sleep Money Club, so thank you if you are from the Sleep Money Club and enjoyed the course. A lot of good reviews. We have a 4.8 star, which is amazing. Okay, amazing, because I thought people were gonna think I was talking too fast, or I was talking too slow, or I was rushing the content, but I tried to make good content. We have over 2 hours here of content. Very, very good. If you don't like, you can get your money back. Udemy stuff, normal Udemy stuff. So I'll be providing a coupon code for this. Armat says, I did the course, awesome, appreciate it, man. Thank you. I'm getting a lot of positive feedback. I'm a little bit scared that no one wants to give me bad feedback, but bad feedback is also appreciated, because it will make me work harder and fix the issues here. I can change whatever is wrong. I can fix whatever I can fix right now in the course. And for next courses, it will be even better, because I'll fix what needs to be fixed. Okay. So make sure to check it out. Whenever the coupon code is ready, I'm gonna be announcing it on Twitter or right here on the next streams, on the next live streams. So this is it. Oh, okay. Another thing that people were asking me, let me actually turn this light right now, because it's getting a little bit dark right here. Is this yield right here, this yield per day. Erman says, great course, thanks to you, Everton. Hey, thank you, Erman. Erman is the real OG right here. He helped me during the course. He's helping me with the Sleep Money Club. Really get the best moderator in the Sleep Money Club is Erman, hands down. I would love extra videos with examples of how IV interacts with price and our decisions. Yeah, I might be doing that if we have a lot of low IV weeks, where I can actually show previous weeks where IV was low, then that would be really good. So that way I can add it to Udemy. Whoever has the course will just be able to log in and watch it. So I'm not saying let's hope we have low IV weeks, just because that's bad for option sellers. But if we have low IV weeks where I can show actual data, examples of low IV weekly options, then that's something that I have to add as well. Very, very good, noted. So thank you for the comment. The yield, this yield right here, not everyone gets it. Okay, once it goes way out of the money, you don't get the yield anymore. This yield right here, because for Erman, I think it was Erman. For Erman, Erman was saying that his yield, he was not getting any extra yield. Okay, this right here is just something that Lyra does to incentivate, to make sure people remain here on Lyra, doesn't go to other protocols. So they're actually paying you to make money. Okay, they're giving you extra money for you to get money. You also have a rebate that if you have a lot of staked Lyra tokens in the protocol, you pay less fees, because Lyra does have fees. So this is really bad, but you can fix that. Tinus said, can wait, buying the course now. Hey, thank you, Tinus, appreciate that. Let me know if you have anything, if you have any questions right here on the Discord, on the Sleep Money Club, or on Twitter. Very active on any of these platforms. Let me know. Anyways, where can I check how much yield is it making, or where my protocol, where this money is going? Okay, where do I check? You go right here on rewards. Again, if the option goes very out of the money or very in the money, you don't get the rewards anymore. But all the rewards that you have, it will be right here. Okay, so I have to claim 5.76 staked lira, and the staked lira I'm gonna stake it just because I don't need this money right now, and it's just extra cash that I'm getting that eventually I'll be dumping anyways. So it's just free money. So there is no harm in free money because I'm not actually trying to get, I'm not actively trying to get lira tokens. So if they're giving me for free, whatever. And the OP tokens, I actually do have some OP tokens. I do believe in the Optimism protocol. Even if right now it's just a governance token, I still believe they are going to create utility for the token. So this one I'm actually keeping. I'm keeping these tokens. So Erman says he's not getting any extra yield. This might be because it's already out of the money. Maybe. Let me see. Let me know the delta on your option so we can see. We can discuss right here if it is way out of the money, way in the money, how is it going. So for the staked lira, once I claim it, it's going to go to the staked lira pool. It's going to give me an extra 10% APY, which is not really something to be bragging about. But right here, it does take 14 days for me to unstake this staked lira and then dump it if I want to, which again, I'm not going to be doing just because then I can have fees. I can have trading fees. So if I get to eventually, if I get to 1,000 staked lira, I'll get 20% less fees. So actually I'm going to pay the fees in full, but I'm going to get them back, okay, in yield. So I'm going to get the fees in yield. I'm going to get them back. So this is really good. I think every protocol should have this to incentivize people if they have fees, of course. If they don't have fees, this right here is pretty much worthless, pointless. But if they do have fees because they need to maintain the protocol, protocols, it's okay for protocols to have fees. I'm not against that if they're cheap, okay. But lira, I still do think sometimes they can be high for you to close an option, but the majority of the times it doesn't bother me that much. Erman says that the delta is above 0.1. Okay, so that's weird. Let me see if I can find any dots on the yield actually. So my plan is to get this as high as I can. Okay, I'm not gonna actively buy lira token just to stake it right here. I don't want to do that. But every token that I get, I'm just gonna leave it right here. So we actually have a little bit of an issue, which was talking to Erman as well. I talked a lot with Erman about options. We have a little bit of an issue when it comes to TVL. You can see right here, the TVL is dropping so far, very, very fast for lira. Okay, now this issue has been mitigated to some extent because lira just got $3 million, I think, in liquidity from another protocol. Now I don't remember which protocol it is. So they just got 3 million in liquidity from that protocol. So this will boost a little bit more the TVL for the Ethereum and Bitcoin. Solana, most likely people don't want to trade it anymore just because Solana is tanking. People don't actually actively want to do that with options, even though I think the best way for you to make money when something is going down is for you to short, to buy a put with these tokens. So if you do believe Solana is going to go down, you should buy a put, right? The furthest out of the money, the furthest expiration you can do, like next year, you buy a put for like $15 strike on Solana and just let it ride, you know? If Solana goes to $5, $2, you're going to be very, very rich. But I don't trade option to speculate, so I'm not going to do that, to be honest. So let's actually look at the docs to see if we can figure out the yield thing for options pricing. Dynamic fees. Incentives. There you go, right here. Okay. So if delta is under 10 or above 90, you don't get any yield, okay, per contract. If we get between 10 and 90, you see we have a different range of yield rate, okay? And again, if it goes in between these, okay, you get this this right here. I'm not gonna stay here and calculate these, but you can see that it is delta based. So I don't understand why yours. Let me see if there's anything talking about minimum needed. Earning interest rate. Okay, so it cannot be over 4 weeks. So we cannot sell monthly options and get a yield on it. Yeah, you should be getting that yield. So maybe try to reach out on their Discord to see why you're not getting that yield, because you should actually be. Just provide them your tax ID, your transaction ID number, and see what they can say about it. Because let me go back to the trade right here. Yeah, I'm getting the yield. So we see that right now it was 7 before, it was -7, it's going up to -4, meaning that Ethereum must be climbing, right? Yeah, Ethereum's climbing to 87. Actually, let's mark our, let me duplicate this. If you don't know what I'm doing, let me explain that to you real quick. I'm gonna lock this, move this right here to 1200. So now we go right now and all the way to December 9th, Friday, and 5 a.m., which is when we... Okay, so what am I doing? I am actually just putting it in a visual way where the strike is. So where do I need to, let me lock it up. What is the price that I need to avoid? So if Ethereum closes above this green line by the end of the green line, I get to keep all my premium. Okay, so I get to keep all that 3% that I've made. It goes, my collateral gets back to my wallet. I keep the premium that I collected right now. I don't have to pay anything else because the option is going to expire worthless. It's going to expire 000. If it closes between this one and what was it, $1,000, so right here, somewhere right here, if it closes between these two, then I do lose some money. I lose some money from my collateral. So the collateral that I'm gonna get is a little bit less than the collateral I deposited, okay? Until I get liquidated, of course, which is gonna happen once it reaches the liquidation price, which for us was liquidation price 1,060, okay? Which I do not believe, and of course this is already proving to be right. I don't believe Ethereum will go down by this this much by next week. So let's see, intermission, Sony. I think this is it for... Oh, I just said I dropped some frames. I hope you guys actually are able to see it in the live stream. This is it for today's week, for today's live stream. These options, you can follow them on chain. You can follow them because it is public trading, and also you can ask me how's it going. I always share, even if I lose money, it's okay, because it is. I'm not a crypto options guru trying to make sure you guys buy my course so I can buy my Lambo. I don't have a Lambo, you know. I only have a motorcycle, so that's not something that I'm trying to do. Every trader wins and loses. Okay, it is okay to lose. don't buy anything from people who say they have 100% win rate. Don't listen to these people. Don't listen to me if you don't understand what I'm doing. Knowledge is power. So I'm trying to provide you with knowledge for you to do that by yourself, for you to be able to sell your option without having to tuning in on anyone live stream, on anyone's course, or anything like that. All my information that I give is free. The course is just a place where all the information is in one place. So you don't need to buy my course if you don't have to. I reply to every comment, every DM about options. So you can ask them for free. I don't charge anything. I don't have a rate per hour for us to talk. Just if you have a question, just let me know here on Discord, wherever you want to. I'll be glad to help you out. So unless there's any more questions, I'm just gonna end this. I'm gonna sell the option on the pool for the people that are in the pool. If you're interested in joining the pool, let me know. We can make that happen. The pool right now is very private. It's for a couple of people only, just until we have a couple of months worth of data collected. Then I can open it for the public, for everyone who wants to invest their money there, which again, you don't have to. It is better for you if you do that manually. You understand how options work. You're going to make way more yield. You're going to make way more money, and you're going to grow in knowledge. So I hope this was an insightful live stream for you. 46 minutes. I didn't think it was going to take that long. Thank goodness we did not have any loud noises from the neighbors. So appreciate everyone who tuned in, everyone who joined. Thank you, Armat. Thank you, Tinnis. Thank you, Erman, for joining. Thank you for everyone who is not commenting but is watching. I think we have 7 people right here, so a lot of commenting users. So I do appreciate every one of you. Thank you so much. I like doing these live streams. I enjoy doing these live streams, and I hope you have an amazing weekend. And I'll see you guys probably on Monday. I'll try to make the Monday Monday live stream work, where we go and we talk about yield protocols, where can you deposit money to farm some tokens, and everything of that sort. So I'll see you guys on Monday, maybe not. Otherwise, see you on Friday. Thank you to the Sleep Money Club people. Thank you to the YouTube people for joining. And I'll catch you guys in the next one. See you.